In this video, we're going to be talking about why Wall Street seems to be hating on new traders. They're talking about swing traders, day traders, people who are new to trading like they're complete idiots. What is up with that? Well, we're going to talk about it coming up next. Hi everybody, my name is Dee Burks and this is Retirement Rescue, where we talk about how to make money, save money, and live well in retirement. Well, one of those ways we make money for retirement is to invest in the stock market. But here lately, every bit of news coming out of Wall Street is blaming day traders and short-term traders for all their woes. Oh, they're not acting right. What is that about? I even saw a quote from a person at a big-time firm that said, oh, well, these new traders don't understand. They just keep expecting the market to go up. Huh. You're telling me big-time traders get into the market not expecting it to go up? I mean, is that why people invest, so they can lose? The dumbest statement I've ever heard out of the mouth of Wall Street. But it's happening a lot. But let's break down why that is. Now realize, this is just my opinion. I am not giving you financial advice, it's entertainment only, and now that we've said that, let's talk about Wall Street. It's really interesting that the advent of so many new traders and day traders and short-term traders has changed the way the market behaves. And one of the things that I talk about a lot when we talk about the market is game theory. That's all the market is. There are technical aspects to the market, but a lot of it is psychological. That is why people who have been gamers do so well in trading. They understand game theory. They understand how people behave to good and bad news psychologically, and they're able to benefit from that. That's all Wall Street is, y'all. That's all the stock market is. It is a game theory paradise. Now, one of the things that happens is when you have a lot of new players come into the game, and by the way, we saw this with professional poker. You know, years ago, the old school poker players, they're used to the game going a certain way. You're expected to play hands a certain way, and they can more or less predict outcomes because it was played in an expected fashion. Wall Street's the same way. The big hedge funds, the big institutional managers, they expect the market to react in a set pattern, like it always has, to good news, bad news, unemployment numbers, the Fed chairman. They expect the market to behave in certain ways. Well, guess what? All these new traders has changed how the market behaves. That happened in the early 2000s, especially 2006 to 2012 in poker. You had all these new people who were learning poker because it was on television. People were seeing that, hey, I can do this. There was no barrier to entry. Anybody with the money could play. And so you had a lot of new players. And so games like the World Series, the main event of the World Series, went from having, in the early days, just a few people play, to hundreds of people play, to thousands of people play one game. And it fundamentally changed the game. Well, that's what's happening on Wall Street. Because the people who are coming into the market, they don't play the same way. They tend to be hyper aggressive. They tend not to react to news in the same way as traditionally has been expected. Number one, they don't believe the news. None of us do anymore. And so they behave differently. And the old-time traders don't like it. They're not able to beat the market anymore. They're not able to win like they used to, playing the game the way they're used to playing. That's one of the reasons you're seeing well-known hedge fund managers step out of the game and retire. You're seeing institutional investors not earn a decent amount of money. The same way they've been doing it isn't working anymore. The rules have changed. And so they have two choices. They get on board with the changes and they learn the new game, or they get voted off the island. And you're going to see a lot of that. That's one of the reasons that Survivor is so popular, because it is an absolute incredible microcosm of game theory. It's not about who's necessarily the best. The best doesn't always win. It's the person who plays the game the best. It is not the person with the best skills. It's not the person with the most knowledge. It's the person who plays the best for that set of circumstances. Well, one of the things about short-term trading, whether that be swing trading, day trading, those traders love volatility. And so while long-term investors are just interested in the overall growth, these short-term investors are really interested in the swings, in the up and down. And so you have a lot more people trading those areas. Now, another big issue has been that lower barrier to entry. Just as we've seen in poker years ago, boy, you had to have a lot of money and had to know what you were doing. Now, little players can get in the game. And the stock market is the perfect example of that. Little accounts of $1,000 can get in the game and play. Used to, you couldn't get a brokerage account if you didn't have $10,000, $25,000, and that was just to start, and you couldn't do anything. You had to have a big six-figure account. And even then, it was a pain in the butt. Well, now with all these online brokerages that offer free trades, so you're not being charged up and down on every trade. You don't have that juice you're paying. It is a fabulous way for small traders to get in the game and actually see a profit. Now, having said that, there's pluses and minuses. Not understanding what you're doing means you'll probably blow up several accounts. You'll lose several $1,000s. Just like when you go to the casino and you play poker, the odds that you're going to win 1 out of 7,000 people playing that game are pretty slim. You have got to learn and grow and know what you're doing, and it's probably going to result in a lot of negative trades right off the bat or early on. But you know, that's how people learn. People don't step into something and do things perfectly. And I promise you, these big fund managers that are griping about all these stupid small traders, they started out just as stupid. They didn't learn everything on the first day. They made their big mistakes, just like you're going to. And guess what? They're not any better than you. Because here again, it's not the person with the most knowledge. It's not the person with a fancy schmancy degree or some big brokerage that wins. It's the person that learns to play the game the best. And maybe that person is a cashier. Maybe that person is a truck driver. Maybe that person has some other form of business they do that has nothing to do with trading. And guess what? They can be just as successful if they're willing to educate themselves and learn the game. And that's what it comes down to. Are you the person who's willing to learn? Are you willing to take your lumps? Are you willing to understand up front, this is probably going to cost you money. That education is expensive. While you're not paying to get a degree, you're paying in trades, and you're going to make some bad ones. But that's okay. That's part of that education. As long as you understand it up front and you know that's part of the game. Personally, I think it's great so many people are getting involved and learning these things. They're learning about companies. They're learning about new technologies. They're learning how to invest. What that tells me is we have a lot of people in this economy who understand in order to create their own wealth for their own family, rather than rely on someone else, they're going to learn to do it themselves. And I think that is a very good thing. The more people who can become financially astute and learn the financial systems and the way things work, the more people who will ultimately be successful. That's an excellent thing. So you have to ask yourself, are you one of those people? And if you are, where are you going to start? Don't wait. Start getting educated. You can go to any of these free brokerage accounts and sign up, whether it be Schwab, TD Ameritrade, Vanguard. They have tons of education, tons of free education. You don't have to pay for it. You can get in there and start learning. You can start with a very small amount of money and start learning to trade in a very, very small way. You can teach yourself what they know. They also have live webinars that are very instructional. It's better than getting a degree or education, because let me tell you what, they don't teach you that stuff in college. But you can learn direct from these brokerages for free. and be well on your way to being a millionaire. So if you've enjoyed this video, please click subscribe, and I'll see you next time.